Hey, what's up, guys? It's Jonathan here. So, the chair of the Federal Reserve, Jerome Powell, just spoke at the FOMC press conference today. And some of the things he talked about have significant implications on the markets going forward. So, in this video, we're going to discuss what he said at the meeting, how all of this affects your money, and my investment strategy moving forward. If this video provides you any value, please consider hitting the like and subscribe button for YouTube algorithm. It greatly helps out the channel and helps push this video out to as many people as possible. So let's get right into it. So at the press conference yesterday, he started saying some of the normal stuff he talks about, talking about inflation and what the Fed's position on inflation is and things like that. But this time around, he talked about how the economy is making progress towards reaching the goals of the asset purchase program that was put in place in response to the pandemic. And he stated that if this trend continues, they'll start tapering asset purchases sooner, which I think can be as soon as the next FOMC meeting in early November, barring that all the trends continue the way they're going right now. And they plan on gradually tapering in a process that will end at the middle of next year. The Fed chair continued by stating that the end of the tapering process will not signal the start of interest rate hikes, or what the Fed likes to call takeoff, and that rates will stay at zero until maximum employment is reached. We have consistent and steady 2% inflation. About half the members of the committee believe that this will be the case at the end of next year. And then the press conference went into questions. The first question that came up was the variability of the FOMC members' timelines on takeoff, which Powell responded by saying that there are some members that have quicker timelines versus others. There isn't a wide gap in variety. Powell was also asked, what does the committee need to see with the job report to begin tapering in November? Powell responded by saying that he personally wants to see a reasonably good job report to pass the test to start tapering. He was also asked what the Fed's response would be if the U.S. government didn't raise their debt ceiling. And Powell went on to say that if the U.S. government was to default on their loans, this could cause severe damage to the markets, and that the U.S. government should make their payments when they are due. He also went on to state that no one should expect the Fed to be able to fully protect the economy from damages associated with a U.S. government loan default. He was also asked about what the Fed response would be if inflation and unemployment stayed elevated. Remember that the Fed has a dual mandate: max unemployment and keep inflation under control. And to this, Powell said that the committee would weigh the long-term trajectories of these two factors and make a decision on the path forward. And that we're currently seeing high unemployment and high inflation, mostly due to the COVID shock of reopening. Then he was asked about the Evergrande situation and if there's any fears of this happening in the US, in which he responded that back in 2019, the Fed was worried about the corporate debt levels in the US. And the fear was that if there was an economic downturn, that there could be cause for a lot of corporate defaults. But luckily, this crisis was averted due to the passing of the CARES Act and other stimulus bills that Congress enacted. That the U.S. markets have very little exposure to Evergrande's situation, so we most likely won't see any response from the market. The final question they got was about CBDCs and if the Fed is considering creating one of their own. And if you don't know what a CBDC is, it stands for Central Bank Digital Currency. And Powell responded by saying that the Fed is still determining if they should pursue creating one or not, and that they'll be releasing a discussion paper soon on the topic. If you guys would like me to go over this paper, let me know in the comment section down below. The most important question is, how does all of this affect your money? So when it comes to real estate, I think once the tapering starts, we'll start to see a rise in mortgage interest rates. And the reason for this is pretty simple. One of the assets that the Federal Reserve buys a lot of is mortgage-backed securities. And if the Fed starts to taper their purchases of these securities, the market has to find other investors to buy them up. To attract other investors to buy it up, they'll have to increase the rate of return on these securities, which in turn means that they have to raise the mortgage rates on them. Like I've stated before multiple times on this channel, anytime mortgage rates go up, home values come down. I don't think we're going to see 4% like we had before the pandemic for quite a while, but we are going to see an uptick in mortgage rates, in my opinion. So if you have properties that you want to finance, you may want to consider getting them refinanced sooner rather than later, as I don't think we're going to see interest rates drop anytime soon. And if you're in the market to buy a home, this may create some buying opportunities for you to be able to buy a house with less money. When it comes to stocks, there's two types of stocks that are going to be affected the most by tapering. Growth stocks and stocks with a lot of debt on their books. When the Fed begins to start tapering, I think that this will cause inflation fears to subside, leading to a run in growth stocks, as their future earnings will not be discounted as severely as they are now. When it comes to highly indebted stocks, I think a rise in interest rates could be terrible for these companies, as servicing the debt will lower their profitability. So for me, I'm looking to buy my favorite growth stocks that still haven't ran, and avoiding companies with a lot of debt on their balance sheets. And when it comes to crypto, I think that the run in crypto that we've seen this year has been mostly fueled by inflation fears. And there's a good chunk of people that see crypto as an inflationary hedge. But if we see the Fed start to taper, inflation fears will most likely fade. I think that this could cause some temporary softness in the crypto market. But I'm still bullish on crypto long term, so I'll be looking for buying opportunities as well. So I'd like to thank you guys for watching. If you enjoyed this video, please hit the like button for your YouTube algorithm. It greatly helps out the channel and helps push this video out to as many people as possible. If you enjoy my perspectives and the way I explain things, consider hitting the subscribe button and notification bell so you get notified anytime I post a new video. Also, I'd love to hear from you guys. What do you think about the Fed and how they're handling this whole inflation and unemployment situation? Let me know in the comment section down below. Also, follow me on all my social medias. I try to post there every day. And thank you so much for watching. I'll see you in the next video.